Hey everybody, it's Don Durrett with Gold Stock Data. Today I'm going to do a video for you of the best producers. These are producers that rate as a three bagger or higher. So 3, 5, 10 bagger. 2.5 is a likely three. 3 and 3, 5 are likely fives, and 4 is a likely or a possible 10. On this list, there's only two that are fours. And so if I sort them real quick here, I can show you the ones that there's only 10 stocks, I think, that are five baggers or better, and the rest are three baggers. So we're getting close to that point where these stocks are not going to be so juicy and the alpha is going to kind of be gone. So I figured I better hurry up and do this before the HUI gets much higher. The HUI, it's at 284. Once it gets above 300, it could really take off. And these stocks could, once they go to a two, I really don't like to buy these stocks when they're rated with as a two or lower producers. And even the ones that are 2.5, I don't get excited about them. As a matter of fact, I own all of these stocks except for three of them. And the three that I don't own are all 2.5s. And if they had better upside, I would own them. But I'll mention the ones that I don't know when I get to them. Let's do these in alphabetical order. So, as I was mentioning, um, these are all stocks that have still have significant alpha. The ones that are rated 2.5, I think still have five bagger potential because these are rated at $3,000 gold. And I think we're going to $3,500 gold. So at $3,500 gold, these stocks that are 2.5s are all possible five baggers. Um, and some of them could be even better. These are kind of my in my kind of my top picks for producers with significant alpha. So if we look at the market cap, I'll go ahead and sort by market cap. There's only two on this list. There's only two. This is fully diluted market cap that are under, I'm going to say 500 million. So we just have Orezone and Jaguar, which I think these things are going to jump to 500 million fairly quickly. So we got Galiano, Orezone. Those are the only three. Everything else is, you know, over a billion. So the average here is about 1.5 billion, I would say. So let's go back to alphabetical order. So as far as the categories, M is major. So we have about four majors on here. One, two, three, four majors. One near producer, Artemis Gold, and then MP's the mid-tier producers. Okay, so if we look at their cash balance, if we sort by debt, see if there's any companies with, significant balance sheet problems. So you could consider Kinross as, a balance sheet issue, but I'm okay with it. They generate a lot of free cash flow. Endeavor, it's interesting the majors. These two are both majors, and Endeavor 1.3 billion, and Evolution Mining. This is probably the worst balance sheet here. This is one of the ones that I don't own. It's a 2.5 rating. We got IM Gold. They've been a bit of a turnaround story. Their balance sheet isn't great, and then we have Newfound Gold. It's another one, and then Eris. And then after that, most of the balance sheets are in good shape. We go down here, we see a whole bunch of them with no debt and a lot of cash. Okay, let me go back here. Sort by name. Okay. Here we have the cost. So this is the break-even cost. I'll go ahead and sort by it. So Orla is the head of the boat here, and Orla and Dundee and Capricorn, K92, Centerra, Perseus. These are the guys that are all generating a whole bunch of cash flow right now. We have these $1,000 margins or better for these guys. Ramelius, another company that's really kicking butt, no debt, generating a lot of cash, has a lot of cash on their balance sheet. Artemis, which is just starting production, they're near-term producers, they're just ramping up. And we have Torex, they're building a mine in Mexico. We got Endeavor Mining, they've always done a good job. West Africa, so they, usually you don't have high cost in West Africa. There's another West African company. We have Aris Mining, Columbia, Kinross, Regis, and then we start Westgold. So once you get, I think $1,600 gold, a break even in cost, is your margins are really strong, sort of like $700. So once you get above 1,600, then the cost starts to become, a bit of an issue as far as investors getting excited about these companies. So we got Orezone, New Gold, Colibri. They just bought a Marathon. I really like that pickup that they did. And then we got B2Gold. It's another one that's not getting a lot of love considering their costs, and they're generating a lot of free cash flow. Plus B2Gold, I think their costs are going to come down. They're building that mine in Nunavut up in Canada right now. Can't think of the name right now off the top of my head. And then now we start getting to the higher cost companies. We got Red 5. 16 is not really a problem, and they're kind of right on the margin. And then the last four kind of are high cost: Jaguar, Fortuna, IAMGOLD, and Galiano. Jaguar, their costs are actually going to drop over the next 3 to 4 years. They have two mills that are only half utilized, and they're going to take both of those mills up to full utilization. As they do that, their costs are going to come down. Jaguar's been another turnaround story, like Newfound and IAMGOLD. Those are the three kind of turnarounds. The other ones that turn around would be Eldorado. They're not on here because they have a 2 rating. Fortuna, I think Fortuna's cost could potentially come down because they have 2 mines in West Africa. And again, West African mines tend to have low AISCs. They have high cost Argentina, and I can't think where I think they have another mine, South America. IAMGOLD and Galiano, they're both, Galiano's costs are going to come down. Galiano's are going to come down significantly. They're expanding production. I expect IAMGOLD's to come down. I don't know about significantly, but I think both of these, if their costs weren't coming down, they wouldn't be on this list. And now I'll show you what I use for the upside downside, which is the free cash flow growth. So we sort this guy here. So you can see Kinross and Ramelius and IAMGOLD, they're barely 3-baggers, kind of right on the edge. But I expect these companies to get really good multiples. They're multiple expansion, so I expect them to definitely be 3-baggers at $3,000 gold. Then you got Evolution and Red 5 and Torex, Artemis Gold. So these are kind of your pricier stocks. West African, Orla. So I'd say from Orla is kind of a growth story. That's why I like it. West African, I think, is also a growth story. Artemis, I expect them to pick up another mine. So they're a single mine right now. I expect them to grow that way. And then once we get above that, you start getting into the better upside. Capricorn. Capricorn's on my buy list. I don't own Capricorn or Evolution or Torex. I'm going to pass on Torex, but Evolution and I probably might pass on Evolution too, but Capricorn is definitely a stock that I want to pick up before the breakout. And the reason why is because if it's a four bagger at $3,000 gold, then it's a five bagger at 3,500, and that's kind of what I focus on. If I find a company with five bagger upside, I want to own it. Fortuna 400, Centerra. Centerra, this is a company that is really turned around. I wouldn't call it a turnaround story, but they kind of changed their whole strategy. They sold all of their, I think they lost their mine in Kazakhstan. So no, they no longer have mines in the old Soviet republics, but they do have some mines in Turkey. So they're Turkey and Canada, but their growth is in Canada. But it's a good management team. It's kind of an under the radar stock. Perseus in West Africa. They're another, I consider them a shark, a growth company. Dundee, they're in Eastern Europe. Another, I think it's a growth stock, generating a lot of free cash flow. New Gold. My only worry about New Gold is the length of the mine life at their mine in Canada. New Afton's okay. New Afton's 10 plus. It's their other mine. It's their flagship that has a bit of a short mine life that I'm concerned about, but I do own it. But um, I that's the one there. Endeavor, impressive company. It's one that's not getting a lot of love because it's in West Africa. That's the reason why it's got this significant upside potential. K92, one of the better properties in the world. They're going to be drilling that thing for another 20 years, and everywhere they drill, they find high grade gold. They've been very conservative. They don't. Um, they could drill twice as much as they drill every year. They're just content to grow slowly and methodically. That's the management and board. That's their. That's what they've been doing for the last 5 years, and they're going to continue doing it. But it's just a really they're basically a single property company. But I'd like to see them maybe do a merger of equals with somebody, um, just to kind of prevent any takeover attempt. Because again, it's a long life mine. They need a little bit of protection for that. Galiano, they have the high cost, but again, I'll show you more on Galiano. I think their costs coming down. Now we get into the really juicy stocks. Westgold, very impressive company. I don't think they have any debt, 200 million in cash, somewhere around there. Um, just did a merger with Karora. It looks like it's going to finalize. I like their CEO. I like their properties. Westgold, like it a lot. B2Gold is a company that is really not getting investors are really ignoring it. It's kind of like Perseus, Endeavor Mining. They have a little bit of they do mine in West Africa. They have a mine in Mali, and the mine in Mali is the reason why investors are staying away. So, but they pay about a 5-6% dividend. They pay one of the higher dividends out there. I don't think that dividend is going to come down. They generate a lot of cash. They have about 350,000 ounces of new production is going to come online in the next 2 years. They're not getting any value for that. So yeah, B2Gold's I think looking really good. Like, you do have the risk in Mali. Aris Mining is another one investors are ignoring. They're building two mines right now, and both of them are not built into the price. We'll take a look at Aris. But Marmato is getting built right now, the underground mine. Plus their existing mine is getting expanded. So they're adding, I don't know, 200,000 ounces. It really isn't built into their share price. Plus they have two other mines that they're trying to build. So Aris is another one that's just, unless you're very conservative and you don't want to be in Colombia, but if you're not risk averse, it looks great. Regis, just they just had a really good quarter. They're generating a lot of cash. I think they're going to get a premium in Australia. It looks really good. Oh, I see a stock that's missing on here. I'll scroll back up, but it's Ramelius. I didn't see Ramelius. Jaguar. This is one that Eric Sprott really likes. He owns, I think, 50% of it. This is another big turnaround story. Their costs are going to come down. People are ignoring the growth, but it looks good. And then Orezone, another one in Africa that's getting ignored. That 14 bagger, that's just kind of crazy cheap. But oh, there's Ramelius. Ramelius is all up here at the top at 300. So I'm not sure if I'd agree with Ramelius being that cheap. So some of these stocks, now we'll look at some of these stocks individually. Take a look at Aris here. I was telling you about they're going to add a bunch of production that they're not getting any value for. So they're about a 900 million market cap. They have a decent balance sheet, 200 million in cash, 377 in debt. Have a lot of gold. They're producing 230,000 ounces today, and they're only valued, and they're generating a lot of cash, 1550. So margin's about $800. And yeah, it's currently valued at 5. Their current multiple, free cash flow multiple is a 5, which is kind of crazy. And they're going to be they're adding all this production as well. So if we look at the productions they're going to add, so Marmato, which they're building right now, they're going to ramp it up to 160,000 ounces in 2026. First pour it's not until the Q3 of next year. And so the market's giving them no credit. They're saying, prove it to us kind of thing. But these are good mine builders and they know what they're doing. And, it has $1,000 ASIC and they're not getting any value for this 160. So they're currently at 230. They're going to add 160. That's 390. Let's call it 400,000 ounces. And they're valued at $900 million. That's kind of insane. And then Segovia is getting expanded. That's their current mine. They're currently mining 200,000. They're going to add 100,000 to Segovia fairly soon. So they announced increasing Segovia by 50% from 200,000 to 200,000 a year to 300,000 a year in 2025. So Aris it's a mystery to me. Why are investors now? Aris kind of reminds me of some of these development plays that are just kind of crazy cheap. You look at them, you go, why are they valued at $10 an ounce of gold in the ground? It makes no sense. Like Free Gold Ventures is valued at $7 an ounce in the ground, and they have 50% insiders. It's like we're seeing a lot of insanity, and I don't think a lot of these valuations are company based. I think they're industry based, sentiment based, because I see so many of them. I call it these companies are mispriced. I think Free Gold's mispriced. I think Aris is mispriced. I mean, severely mispriced. I mean, we're not talking about 50% mispriced. We're talking about 100% mispriced. Free Gold's situation, it's at least 3x mispriced. It's valued at $7 an ounce in the ground. I think it should definitely be valued at $20 an ounce in the ground. And Aris should be valued, at $1.5 billion. Totally ignored. Okay, Artemis Gold. So they're in Canada. They got this project from New Gold. They've done a really good job building it. It's 8 million ounces in the ground, going to generate a lot of free cash flow. I just think they didn't use a lot of debt to build it. I just think this is going to be a company that's going to be a shark. I think they're going to grow through acquisition. And so it's the Blackwater project in Colombia. They got it from New Gold for $155 million. They basically stole it with a 4% NSR. It's an 8% NSR in the first 280,000 ounces. So that's kind of ugly. I mean, that was one of the reasons why New Gold took it. They're basically, we want this high NSR, so we're going to get paid a little bit. But once they pay that back, they have 8 million ounces of reserves. They're going to produce 450,000 ounces from year 4 to 14. They're not going to start, so they're going to start around 300,000 ounces for the first 3 years. But their balance sheet, 360 million. I think they're going to pay it back fairly quickly. So they had a loan of 385 million. Once they pay that debt off, I think they're going to go and acquire another company. B2 Gold. This is what I mentioned earlier about having, being super cheap for what they have. So they're in Mali, and their largest mine's in Mali, and everybody's like, I don't want to own it. But my feeling about Mali is that they can't nationalize the mines. All they can do is raise the taxes. If they nationalize the mines, then they're not going to get any foreign investment. So I don't expect nationalization. I think that the government wants the income. So maybe the risk there is, yeah, they raise the taxes, but they already have fairly good free cash flow. So even if they raise the cashes, they're not going to just raise the taxes too high because that'll hurt investment. So they're planning to add 100,000 ounces at Fekola once they get a permit. All they have to do once they get the permit, they're going to truck the ore from one mine to another at 100,000 ounces. So basically no capex. And then Goose in Canada is 250,000. So they're going to add 350,000 ounces in 2015, and they're not getting any value for that. Plus their costs are going to come down. So I think, so a lot of these companies are super cheap. They do have risk. It's a matter of, how risk averse you are. For me, I just buy them all and just see who the winners are. I just know that the majority of these companies are going to be winners. Some of them will have problems, absolutely. So I don't over allocate. I expect the winners. I mean, look what happened to Victoria Gold. Victoria Gold would have been on this list, and it would have been kind of a time bomb that we didn't know about. It's possible that Victoria Gold is going to go from hero to zero overnight. Their stock's currently halted, and there's a possibility they don't get back. The shares never trade again, and that's always a possibility with these miners. There's no slam dunks in this business. They all can have problems, and usually it's a problem you don't expect. Like who would have expected, a heap leach pad shift like that? Yeah, they happen, but they're rare, so you wouldn't expect it. That's always a possibility. Any mine, there's an array of problems that can occur. You just don't know if one will happen. Colibri, really strong company. They're generating a lot of free cash flow down in Nicaragua. Now, if you have problems with Nicaragua, you're like, I don't want to invest in Central America, then it's a pass for you. But with their free cash flow down in Nicaragua, and then they acquire Marathon, which just makes them a better company, gives them diversity. So if they have problems in Nicaragua, they can pivot pivot to the Marathon project and find a way to grow out of that. So, the one lesson we did learn with Victoria, it's good to have two, it's never great to be a single mine. And that's why these companies that are single mine, they should go out and find a second one, right? Do a merger equals or acquire another company. Capricorn is another single mine company who needs to do a merger, needs to do an acquisition to get out of that hole. We've seen two mergers of equals in Australia. We saw Westgold and Karora, and then we saw Red 5 and Silver Lake. When you do that, you de-risk your company when you do those mergers of equals. It makes you a better company, and you become the shark instead of the minnow. And so I'm hoping that Capricorn does that as well. One comment about these Australian companies. So we got Capricorn, Ramelius, Red 5, Regis, West African is just there, and Westgold. These companies that mine in Australia, you want to buy those stocks on the Australian exchange in Aussie dollars. The way that I do it is I use Interactive Brokers. It's not expensive to buy these stocks on the Australian exchange on Interactive Brokers. Just make sure that you use Aussie dollars. So you're buying them in Aussie dollars, hold them in Aussie dollars. That way, there's no margin. If you buy them in US dollars on the Aussie exchange, if you buy the Australian symbol using US dollars, they consider that a margin. You're holding it in margin. So if the dollar drops and you don't have any dollars, because it's actually, it basically converts every day because you're holding it in a symbol, but you're holding dollars. That you can actually get a margin call, which is kind of crazy. But if you hold them in Aussie dollars, you don't. It's not considered margin. So heads up to you on that. Dundee or Centerra, I mentioned Centerra was mining in Russian satellite, and they lost the mine, and now they're in Turkey and in Canada. I think it's a pretty strong company. Dundee, another company I think is a strong company. Another company that's a shark. I think these companies want to grow. They tried to acquire Osino. It would have been a really good acquisition, and then a Chinese company came and over the top of them made a higher offer and took it out. And now Osino is going private in an all cash deal. Those are kind of the worst. El Dorado. It's on my list. I took it off here because it's only a 2. So they're actually not supposed to be on the list. Endeavor, so they're mining in West Africa. This is another shark. They like to grow through acquisitions. I think they'll continue doing so. They're really good at building mines. They're really good operators. This is going to be a major for sure. Well, it is a major already, 5 million. Almost 6. So yeah, it's definitely a major. But even though it's a major, it's still cheap. One of the cheaper majors. It's the biggest market cap on here. Oh, actually, I have one. Kinross is bigger. So we have Kinross and Endeavor Mining. And the reason they're on here is because they're sharks. Kinross and Endeavor, they're going to keep doing acquisitions. I think Kinross could potentially get taken out by Barrick. I think it's a really good, Barrick is looking around for majors to acquire so they can kind of catch up to Newmont again. I think that Kinross is got to be in there, a target for them just because of the size. Okay, Evolution Mining, it's not a super juicy stock. They don't have a good balance sheet. They don't have a lot of good upside, but it's a company I've always liked. I've always thought I would buy them if they got cheap enough, but they just never have. So it's kind of on my radar, if you say. Fortuna, I mentioned that, they have these mines that they picked up in West Africa that, Segula, that looks really good. I mean, it just keeps, growing in size, lowering their cost. They have a new property they're drilling in West Africa called something December Sud. I think it's that Simba Sud. They just had some really good drill holes on. So yeah, I'm a fan of Fortuna here. I think they're going to do fine because of their West African mines. San Jose is supposed to be their last year of production. The silver mine in Mexico. That was a big disappointment. I thought San Jose had at least 5 years left, and this is their last year. But they just found a new vein, and that new vein looks like it's going to add at least another year, maybe two or three. I think they'll keep drilling San Jose. So maybe we'll get lucky and San Jose will get a little bit of money. But on the whole, Fortuna now is a gold mining company. Galiano, they have the high cost, but their costs are going to drop. So if we look at, so they're currently, if we look at Galiano, their balance sheet, 131 million cash, no debt. They don't have their shares is just 265 fully diluted. 4.5 million. They're currently producing 150,000 ounces, but it should grow. So 150,000 ounce producer at 472. It should grow. I'm pretty sure they have plans to take it up, and their costs are going to come down. So they're currently about a 6. Their multiples a 6. So they're pretty cheap. A lot of these companies are really cheap right now. I think once the sentiment turns, I don't think you're going to see very many multiples below 8. I think you're going to see a lot of multiples over 8. I think the average, I think, is going to be 10 for these mid tiers initially, and then as the higher gold prices go, I think we're gonna see the average about 15. So I mean that's 3x from here, which and that's not even counting. That's just multiple expansion. So and then you add the valuation on your free cash flow, and it goes up higher. So I was looking on here for their growth. So, see, here we go. Costs are expected to drop significantly next year. Yeah, so they have 9 drill targets on 250,000 acres. I'm pretty sure with their resources of 4.5 million ounces, I'm pretty sure these guys are going to 200,000 ounces. Now, again, this is they're in Ghana, which I think Ghana is better than Mali. I have them 200,000 ounce producer. They're currently at 150. Currently generating about 77 million. I have that growing to 280 million at $3,000 gold at 200,000 ounces. So I like Galiano. If you like West Africa, I think Galiano looks pretty solid. IAMGOLD. So IAMGOLD was they almost went bankrupt. They had a lot of problems. And you can make an argument that they haven't fixed them yet. They're still working them out, but they just built their flagship property, and you can see them starting to bounce. They in Canada, and the Cody mine, 9 million ounces. So they have the Cody mine now is kind of a base, kind of holding them down. And then they're also in Burkina Faso, and now they have this other project, Nelligan, that's 5 million ounces, which is a 75% JV. But that's not going to come into production until about 2027. But between now and then, the one thing about IAMGOLD, their management team is a little iffy, if you will. It's not, it's not quite as solid as some other companies. Maybe they can turn that around. I kind of put them kind of in the same camp of maybe Coeur Mining. It's a management team that'll frustrate you to no end, especially during bear markets, and then they tend to do well during bull markets. And one of the reasons why they don't do great in bear markets is they tend to like to spend a lot of money. They will, do a lot of acquisitions. They will spend money on development, and they won't generate a lot of cash. And then their balance sheet gets ugly. And then when you get a bull market, you're generating so much free cash flow, the balance sheet just cleans up pretty quickly. But it's It's not exactly a juicy stock. It's kind of a stock that a lot of people are going to pass on. They're like, I don't need the trouble. But it could surprise to the upside. Um, you can see where they got into some trouble. They had to sell a mine for for $360 million, and they had to sell part of Cody, and now they're going to buy it back. They sold 10% of Cody for 340 million to Sumitomo. So now they have 60%, and they're going to take it back to 70%. So they get cheap first pour. So now Cody is basically, again, it's kind of their foundation. And then they have Ascani and Burkina Faso, and they say there's some security issues there. So IAMGOLD is definitely not a slam dunk. However, they have a lot of gold, 29 million ounces of gold. They decent margins today at $500, valued at a multiple of an 8. So they're mining about 550,000, and I have them growing to 700,000. So yeah, so I mean, all that risk, and you're only going to get a 3-bagger. But so again, it's not one of those juicy ones, but it makes sense for me since I'm buying a lot of stocks because I don't know, which ones are going to work, and I don't know who's going to merge with who. They might go out and acquire a company that I like. I always like to own the companies that are the buyers, and they might be a shark. Okay, Jaguar. I mentioned to you that Eric Sprott owns 50%, and that they have 2 mills that are both 50% underutilized. And I was down on Jaguar. I mean, I owned it, but I was down on it. I wasn't adding shares. Now I have it in top 25, and I have it a very good rating. So most of you probably know my rating. So at Gold Stock Data, I create my own categories. So when I say category mid-tier producer, this is actually my own category. So for mid-tier producer, I use basically 80,000 ounces. Once a company achieves 80,000 ounces, they go to mid-tier. They're an 80,000 ounce producer. Then I have emerging. After that, it's an emerging major. And emerging major is a market cap of $2 billion or more. So Equinox would be an emerging major. And then these ratings, I make up my own ratings, and then I create my own risk. So some is the lowest risk that you can have. I used to have low risk, but there is no such thing as a low risk gold miner. So some means, yeah, there's some risk, but it's hard to really point to, it's a little bit better than moderate. You could say some is a little bit better than moderate. And then I created this quality so that you could take the downside, which is kind of your risk reward. Upside is just pure upside, as in baggers. And then downside is your risk reward, and then quality and risk kind of all three, they kind of help you with the risk reward. So it's like, okay, I'm looking at my risk reward, and I have a 3. This thing could actually be a B minus. I don't think you get a 3 with a C plus, but you might get a B minus, and you might get a high. And so you want to use all 3 of these together to kind of see my thoughts on it. The rating scale is your grades. It's like a school grading system. So A is as high. I don't do A pluses. A is as high as you get. So A is kind of the ultimate now. So I got these guys very highly rated. I don't have them as a B plus. I have them as an A minus. And the reason why I have them as an A minus is because these guys have been very conservative. They're adding ounces in the ground. The drill holes have just been excellent. So they've been drilling under existing mines. So the capex is really low to add production. So for the next 5 to 10 years, Jaguar's kind of set. They're going to be mining, 100 to 200,000 ounces. Just steady growth. So I think they're going to reach 175 to 200,000. So I think right now they're under 100. They have low shares, which is great. Insider ownership, 60%, which is great. They're paying a dividend, great. Nice balance sheet. Well, they don't have any debt, and they're adding cash. Great. The resources are growing. They're at 3.3 million and it's growing. So they're only producing 70,000 ounces this year, but they're going to double that. And their costs are going to come down. So it's like they're just checking all the boxes. Plus, they're in Brazil. I have no problem in Brazil. Brazil's the New Mexico as far as I'm concerned. Now I get it that they're maybe Brazil is becoming a little bit too leftist slash socialist, and maybe they're not going to be mining friendly. But I consider Brazil to be somewhat like Canada. Mining and farming is kind of the heart of that country, natural resources. So I don't think that's going to change. They might raise their taxes, but look at how cheap it's trading at right now. For a 4 multiple, generating 46 million in free cash flow, and their market cap is 166. So if you divide these two numbers, that's where you get the multiple. So, and I'm only valuing them at 150,000 ounce production, and they print as a 10 bagger. That's a $3,000 gold. So if they get to 175, 200,000 ounces at $3,500 gold, this thing goes to a 15 bagger. And now you know why Eric Sprott's in love with this thing. He usually doesn't like producers, but he owns 50% of Jaguar. Okay, the next one's K92. So I mentioned K92, single, they're in Papua New Guinea. It's a single property company, but they have a lot of drill holes. They're taking their time. It just keeps getting better and better. It's somewhat like Jaguar. I mean, they're just slow and steady. No rush. We're not going to spend a lot of money on drilling. We're just going to spend what we usually spend. Now, I don't have them as an A minus. I have them as a B plus because of the location. I don't think Papua New Guinea is as good as Brazil. If I was a little more comfortable with that, I might have them as an A minus. And then, these could be 3.5s, but because of the location, they're only 3s. But this is one of those ones where you have to read between the lines. I think these are the upper bands. This 3.3 plus. This thing is a solid 3.3 plus, I think. But you just never know in some of these countries. So it's 8 million ounces at 10 grams. I mean, 10 grams, you just don't find a lot of mines at 8 grams or higher. 10-gram mine is just fantastic. They just keep adding more. Every year they add more. No debt. I think they're added some debt because they're expanding their production. So I think they recently added some debt. But they tend to do a pretty good job with their balance sheet. Good, like I said, one of those conservative company. So 8 million, but it's growing. You can see their cost. So it's high grade. So 1250. Look at their cash cost, $500, and which is really good. So their head grade's about 9 grams right now. Look at that margin, $1,100 margin right now. It's I followed this company for a long time. So they have a multiple of about a 9. So investors kind of like it. I like the cost. Prince is a 5-bagger. It's not a shark. They're content with a single property. It's not super juicy. It's kind of a slow and steady one like Jaguar, but Jaguar has more juice. Kinross. Kinross is a major. I mean, they have a lot of big properties. They have a lot of gold. So Kinross has 20 million ounces of reserves, I believe, 23 million ounces of reserves. So, it's a big company. $10 million market cap. I think they're going to acquire Free Gold Ventures, which is right next door to them. Here you can see I have an A minus for them. because their mines are not in bad locations. So their Fort Knox mine is in Alaska. And then they have Great Bear, the Dixie Lake project that they're working on in Canada. And then they have one in West Africa in Mauritania. I'm probably mispronouncing that. And then they have their largest mine is in West Africa. So that adds a little bit of risk. But they sold all the Russian properties, which I think really helped them. So 10 million. They have a lot of debt, so you might want to say it's too much debt, Don. I don't want it. Fine. And then so they have, oh, I was wrong. They have 23 million ounces in reserves, but they have 59 million ounces of gold. They're mining 2 million ounces. And I don't have the Fort Knox mine on here, I don't believe. So we go to notes. Should always read my notes, by the way. I thought they had the Fort Knox mine in Alaska, and it's not mentioned there. So the one thing that's nice about this, my website, is you have these links to the website. So you just go to the website and go to I usually go to investors if it's on here. So here's we have investors. Usually you can find the presentations. So we're going to go down here. We're going to. So I thought they had. Yeah, there's the Fort Knox mine right there. I didn't mention it. I don't know why. So that's their largest mine there. This is the only one that really has risk, but you can see they're okay. They're diversified fairly well. I'm looking to see how much production they have at Fort Knox if it's listed. A lot of my videos are long, so you have to pause and come back and watch the rest of it. I'm almost done though. Here we go. Fort Knox. I mean, it's a significant mine. Basically it's got a 10-year life left. And that's right next. The Fort Knox mine is 4 miles away from the 20 million ounce Freegold Ventures mine. 4 miles away. So they're definitely going to want to buy that. But I definitely should have listed it. So there's Great Bear. So we got this growth, we got Great Bear coming in, and I think we have Freegold Ventures, which has another 20 million ounces. So this mine's huge, 600,000 ounces of equivalent. Tasiast. Chile, La Copia. Here we go. Fort Knox. It's a big mine, 35%. Almost 300,000 ounces. So it's a big pit. Okay, so that's Kinross. New Gold. New Gold has 2 mines. They got the New Afton mine, which is about 65,000, 80,000 ounces a year for the good 10 years. And how come, Don? You always know the name of that mine. I'm looking. Rainy River. I don't know why I couldn't think of Rainy River. So Rainy River, currently the mine life is only 7 years. My guess is that it'll be extended to 10, but it's not long enough. it really needs to be 10 already, expanding to 12. So 7 is, it's starting to become a problem. And that concerns me. If they can get, the faster they get this thing extended to 10, the better. Let's just put it that way. Orezone. So Orezone is a really strong property. West Africa. It's just a matter of, how long it takes them to expand production. So they're mining about 120,000 ounces, but it's growing. It's going to get to 200,000. It's like, how much is it going to cost them? How long is it going to take? So they think they can get it to 250,000 ounces a year. So it looks like they're going to expand in 2026. So, oh, here it is right here. It's not until 2027. So they're going to expand to 160 in 2026. So, that's a bit of a risk for us. It's more of a long-term play here. So they're at 120 today. We're not going to get to 160 for 2 years. And then it's going to jump to 225 in 2027. So it's a big property. Burkina Faso, I mean, not the greatest country to be, mining in. I like Cody better. I like Ghana better, but I like Burkina Faso better than Mali. So it's not all the way. It's not at the bottom of the barrel, but it's not. It's not a great location either. Fortuna's in Burkina Faso. They seem to be okay with it there. They're comfortable. So if you're all right with Burkina Faso, the one thing that's good about Bombori is it's big and it's growing. I mean, 5 million ounces already, and it's growing. I mean, they have a lot of drill targets. Basically, it's a growth story. Balance sheet, it's not terrible, 62 million. Costs are low, $1,600. So they have good margins, $750 margins. It's in West Africa, so you're going to get some really good leverage. Look at the multiple. It's trading at a 2 multiple because of Burkina Faso. People don't want to own mines in Burkina Faso or Mali right now. Single projects in Burkina Faso, it's getting a 2. So you can see that's the reason why it's printing as a 14 bagger, because it's just not getting any love right now. But if you don't mind the risk, it's one of those stocks with a lot of leverage. Orla Mining, is mining in one of the lower cost miners out there. It's like Dundee. They're mining in Nevada. It's a growth story. It reminds me a lot of I-80. I-80 probably could have been on this list, but I-80 was really, really close. They're a small producer right now. I don't think I have any small producers on this list. So that's the reason they're not on here. But I-80 would be one that's I own. I would probably consider it one of the better producers because I just like I-80's properties. So I-80 and Orla are very similar companies in that they have quality properties and they're growth stories. And I want to own growth stories. And they have really quality properties, growth stories. Those are the things that really get my attention because they're kind of long life companies. They're going to be around. They're going to grow the company. Those are rare. I mean, it's really difficult for companies to acquire multiple quality properties where they can grow. It's having a nice pipeline. Giving examples like a First Majestic Silver. They don't have a pipeline right now for silver at all. All they're really doing is extending the mine lives of their existing silver mines. No pipeline. You can see, I mean, that company's been around for a long time. How did that happen, right? So companies that have pipelines, to me, get me really juiced up, really excited, because that's the future. That's something that they can build on. Companies like Aya, I mean, if you compare Gold, if you can compare First Majestic to Aya or Go Gold, I mean, I love the fact that Go Gold and Aya are just focused on development growth, right? Aya's trying to get to about 20 million ounces. Go Gold's trying to get to about 17, 18. I mean, right? They're trying to catch up to First Majestic, and First Majestic is spinning in place. So that's what I like about Orla. First, Perseus. Perseus is basically Endeavor Mining. It's kind of their little sister. They're like right behind Endeavor Mining, trying to catch up. They're trying to be Endeavor Mining. So Endeavor Mining is a major 5 billion. Perseus is about 2. It's about half the size. They're a shark. They're always acquiring projects, grow through growth. So Perseus and Endeavor, they're like the sharks in West Africa. They're going to try to swallow up all these companies. You know, Perseus probably acquire Galiano, maybe acquire Orezone. But that's what these companies are doing, trying to. If you don't mind West Africa, I like that. Now we got Ramelius. The next 3 are all Africa. Excuse me, Australia. So we got Ramelius, Red 5, and Regis, and Westgold. I can do all 4 of these together. They're all about the same size. They're all about the same size resources. We got Ramelius at 1.5. We got Red 5 at 1.8. We got Regis at 1, and we got Westgold. Now Westgold's got buying Karora, so they're going to jump to about 1.5. So, Regis is the run of the litter. It's kind of funny that Regis is the run of the litter because Regis, I mean, at one time was probably bigger than all of these companies. They all caught up and passed them. But they're all, 1 billion to 1.5. They're all about 3 to 5 million ounces of gold. They all do AISC of about 1,200. They all generate a lot of cash. They're all sharks. They all want to grow. They all have good management teams. And for me, it's like, yeah, I want to own them all, and then we'll see which ones succeed. But, I want to get my hands. There's some companies that aren't on here in Australia, and the reason why they're not on here is because they're not 2.5s, they're like 2s. And one of those is Gold Road. The other one is Bellevue. So Gold Road and Bellevue are 2s. I mean, they got away from us. I mean, you wanted to buy those when they were cheap, and Bellevue and Gold Road are not cheap. So they're kind of off they didn't make the list. There's another one. There's one other mid-tier that's pricey over there. Then you have De Grey, which is a development project, and it's too pricey. I am missing one though. And then you got a bunch of development projects that are in Australia that are coming up. They want to basically join this list. And there's about 5 of those projects, and that'll probably be in my next video. It's going to be small producers, developers, explorers. Okay, so Torex. Torex, this is one that I don't own. I've always liked it. There is something about it. It just never really got me super excited. And I think a lot of that was it didn't have enough juice. Torex has always had a lot of free cash flow, so it's never, it's $1.4 billion. It never was really, super cheap. So I mean, if it would have got to 500%, if it would have been a 3, I probably would have bought it. But as a 2.5, I just didn't see it as a shark. They're a single property kind of company. So right now they have one open pit, and they're transferring over to another open pit. So they're going from one property to another, and then now their pipeline's kind of gone. So I never got super excited about Torex, but maybe Torex will, become a shark. And if it does, I mean, you want to own the sharks. And then West African resources. So West African, I put them right below Perseus. I think they are a shark. I mean, a $1 billion company. They have done a lot of acquisitions. They generate a lot of free cash flow. But I would put them right behind Perseus. But they definitely, it's definitely a shark. It's definitely a company that wants to grow. So those are my producers. And hopefully this didn't take too long. I'm going to do one more video tomorrow for the rest of the gold stocks, I'm gonna do small producers, developers, and exploration, probably about 20 names. All right, guys. That'll do it. So I gotta stop my share and stop my recording.